Every financial collapse begins quietly, a warning ignored, a risk dismissed, a system stretched just a little too far. Most of the world never sees it coming, but behind closed doors, the signals were already there, flashing red. In this episode of the Watchtower Report, we examine the next potential Black Swan event, the kind of unexpected global shock that could break the economy overnight. From systemic banking exposure and sovereign debt instability to cyber attacks and geopolitical ruptures, we'll walk through the top threats hiding beneath the surface. Each one may look manageable until it isn't. Each one could trigger a crisis before markets have time to react. This is the Watchtower Report, where strategy meets reality. What is a black swan? Before we look ahead, we need to understand what we're looking for. A black swan is not simply a downturn or a crisis. It's an event that no one sees coming, one that changes everything and makes people say afterward, "We should have known." By definition, a black swan is unexpected or extremely rare, causes massive consequences across global systems, and only appears obvious in hindsight. These events are not just bad, they are transformational. The 2008 financial crisis, the COVID-19 pandemic, the Asian currency collapse of 1997, and even World War I all started as localized issues. But they unraveled complex systems quickly and permanently altered global rules. So, what could the next one be? There are 5 critical fault lines that could become the next global shock, and each one is already under strain. The global debt trap and U.S. Treasury confidence crisis. At the core of today's financial order is one assumption, that the United States will always pay its debts. But even that assumption is beginning to show cracks. America's national debt has surpassed $34 trillion, and the cost of servicing that debt is now exploding due to sustained high interest rates. Every month, the United States pays more just to cover interest, money that doesn't go toward defense, infrastructure, or healthcare. It's simply burned in service of debt. Foreign demand for U.S. Treasuries, the lifeblood of dollar dominance, is declining. China and Japan, once the largest foreign holders, are now selling. Meanwhile, political brinkmanship in Washington has made debt ceiling battles routine, turning America's full faith and credit into a bargaining chip. Now imagine a scenario where a Treasury auction fails. Interest rates spike, bondholders panic, the dollar weakens sharply, capital starts fleeing to safer assets, gold perhaps, or even alternative currencies. Central banks begin to quietly sell off treasuries to avoid exposure. What happens next? Trust erodes, U.S. borrowing costs surge, liquidity dries up, and the once risk-free foundation of global finance becomes the epicenter of a worldwide panic, the hidden banking crisis and the derivative time bomb. Many believe the 2008 crash was about bad mortgages. In reality, it was about leverage, hidden risk, and the fragility of financial products no one truly understood. That danger hasn't gone away, it's simply moved deeper underground. Today, the derivatives market is estimated to be somewhere between $600 trillion and $1 quadrillion in notional value. That includes interest rate swaps, credit default swaps, commodity hedging contracts, and other instruments layered on top of each other, many of them off balance sheet and barely monitored by regulators. Most of these contracts are bets on top of bets, made by global institutions that are interconnected in ways no central bank can fully map. If just one link in that chain breaks, whether it's an energy shock, a sovereign default, or an unexpected rate spike, it could trigger a cascade of margin calls, liquidity shortfalls, and institutional failures that move faster than in 2008. The black swan here is not one bank failing. It's a derivative chain reaction that no one can stop, spreading through Tokyo, London, Frankfurt, and New York in a matter of hours. China's ghost economy and the real estate collapse. While the world watches China's military and technology moves, a deeper, more immediate crisis is playing out, one that could send economic shockwaves across the globe. Real estate accounts for roughly 25 to 30% of China's GDP. For years, developers took massive loans to build endless apartment towers, many of which remain unfinished and unoccupied. Companies like Evergrande and Country Garden have defaulted on huge bond payments, and China's banking system is heavily exposed. Youth unemployment in China is at alarming levels. Economic growth is slowing, and yet the Chinese Communist Party is desperate to maintain the illusion of control. Data is being suppressed, protests are rising, and trust in the Chinese economy is quietly deteriorating. If Chinese banks begin to fail, if the yuan starts to slide, foreign investors will panic. A capital flight could begin, and Beijing's attempt to contain it with capital controls might only worsen the fallout. The Black Swan here is the sudden collapse of confidence in the Chinese financial system. If that moment comes, it won't be contained within China's borders. Supply chains will freeze, commodity prices will swing, and countries deeply tied to Chinese trade, from Australia to Brazil to South Africa, will feel the impact immediately. Cyber financial warfare, the invisible strike. There's a growing threat that receives far less attention than it should: the possibility of a cyber attack targeting global financial infrastructure. Most cyber coverage focuses on leaked emails or ransomware. But imagine something more sophisticated: an attack on SWIFT, the international payment network that clears trillions of dollars in transactions daily, or a strike against major clearinghouses, or the sudden disruption of central bank systems. This type of attack could lock banks out of settlement systems, freeze credit card networks, disrupt ATMs, or create massive delays in interbank transfers. It might last only a few hours, but in that time, confidence in the financial system could collapse. Governments could blame foreign adversaries, Russia, China, Iran, or even decentralized hacker collectives. But attribution won't matter to depositors who suddenly can't access their money. This kind of black swan is uniquely dangerous. It's quiet, fast, and difficult to trace. And once it happens, central banks may be forced to respond with emergency liquidity, capital controls, or even banking holidays. The BRICS currency shock, we've covered this on previous episodes, but the timeline may be accelerating. What happens if BRICS Plus actually launches a gold-backed digital currency this year? Let's say that in July or August, a formal announcement is made. BRICS leaders confirm that energy contracts, starting with Russian oil and Saudi crude, will be priced in this new currency, not the dollar. The immediate effect may not be a crash, but a psychological rupture. Investors and governments would begin questioning the future of dollar supremacy. Countries could start reducing their dollar reserves, and global trade could split between competing systems. One Western, one BRICS aligned. The real black swan here isn't just a new currency, it's the fracturing of the global financial consensus. If the dollar loses its privileged role as the world's unit of account, the US will face rising borrowing costs, reduced influence, and a geopolitical landscape far more chaotic than today. What happens after the shock? In the immediate aftermath of any black swan, the world responds in predictable ways. Markets panic, liquidity vanishes, central banks inject emergency capital, politicians look for scapegoats, and the public is told that we didn't see this coming. But underneath that surface reaction, a deeper transformation begins. Governments may introduce central bank digital currencies to ensure resilience. Biometric identification may be linked to digital wallets in the name of security. Decentralized money may be restricted. Cash may be phased out. And new financial rules will be written, not debated, imposed as part of the emergency response. What comes after a black swan isn't just chaos. It's a reordering, a consolidation, a reset. The system that breaks will be replaced by something else, faster, more centralized, and far more difficult to escape. The world is more complex, more fragile, and more interconnected than ever before. Confidence, not gold, not oil, not even technology, is the true foundation of the global economy. And confidence is easy to lose, but very hard to get back. No one knows exactly what the next black swan will be or when it will strike. But the warning signs are already visible, scattered across markets, nations, and technologies. Because it's never the obvious threat that breaks the system, it's the one we dismissed until it was too late. This has been the Watchtower Report, where strategy meets reality. Subscribe for more. Share this with someone who still believes the system is unbreakable. And as always, we'll be watching.